Hello everyone, George DeSantis here with the look at the market for the week ending June 22nd, 2018. As usual, before we get into looking at charts, let's remind you that I'm not a professional investment advisor, so this is not an attempt to give professional investment advice. We will start by looking at the weekly chart of the S&P 500 as we usually do. Well, let's begin by looking at the weekly chart, as I said, of the S&P 500. First thing I like to look at is what's the relationship of the moving averages to each other. So the 4 exponential moving average, the 4 period, which would be 4 weeks here, but the 4 period is above the 9, and 9 is above the 30. So we do have, according to these moving averages, we do have an uptrend. Now, last week we saw that the market gave us a doji here, very, very fine body candlestick. And I mentioned last week that it seems as though we need to find out if we're going to hold a support at 2750. Well, 2750 has been resistance for a while, and now it should hold a support. Well, last week we went below it, but we closed above it. So when we look at the daily chart, we'll see that more clearly. Now, when we look at the other indicators, parabolic is now below, and has been below for the last 3 weeks, below the most recent bars. So this is indicating to us that as far as the weekly chart is concerned, it's in an uptrend. May not think of it that way, but it's definitely according to parabolic. Now, when you look at MACD histogram has been also above the 0 line for the past 3 weeks. So it's in bullish territory. RSI 12 continues to remain above the 40% line, which is a yellow line. It is now, in fact, above 60. And Williams percentile, which, as you know, I've mentioned this many times, I prefer to see this above 50%, which is this magenta line, and it remains there for a while now. Since in this area here, since it crossed over here, it remains above the 50% line, and as long as that's the case, I feel pretty confident owning stocks. Now, the sum of the rate of change indicator at the bottom of the chart just dropped below the 4% line again briefly. So that's concerning, but I wouldn't make too much of it right now. I think the main thing is the support, whether we're going to maintain support above 2750 or at that level. So let's look at the daily chart. Now, on the daily chart, what we see is a slightly different picture, because for the last 4 days last week, parabolic moved above the most recent bars, as you can see here, indicating that on the short term, we have a daily chart, we have switched to a downtrend. However, notice that yellow line, which is the 2750 line. Notice that we dropped below it for the low of these 2 days here. I think it would be Tuesday and Thursday. We dropped below it, but we closed above it or close to it. And then last week itself, we closed within it. We closed above the 2750 line, but we have now the body of this candle totally engulfed by the body of this candle, which presents us with a bullish harami, or what I've sometimes mentioned is considered a pregnant woman. This body completely immersed in this body. So that's insofar as the moving averages are concerned. Notice the 9 is still above the 30, which is the green line. So I read this to be a short-term pullback, and we anticipated that from this bearish divergence of the MACD histogram. Remember last week I mentioned that there is this bearish divergence, but bearish divergences on a daily chart are not as significant as when we find them on a weekly chart. So we did get that materialization here, this pullback from this divergence. And now the question is, do we go much further down or do we find support at 2750? My bet is support at 2750. What was once resistance becomes support, and we're setting up to go higher from here. Looking at the other indicators, RSI 12 dropped a bit. It's now at 39.58. So it's just approximately at the 40% line. But we do have Williams percentile still above the 50% line, which has been the case, as you notice, since this area here, which was May 3rd when we crossed above it. Okay, so now we have percentile remaining above 50%, in fact ticking up a bit on Friday, and the sum of the rate of change indicator dropped again below the 4% line. So it's meandering along the 4% line here. Big picture is that on the weekly chart we have an uptrend. On the daily chart we have an uptrend, and we have now a bullish harami on the daily chart. You could see it here. So I'm anticipating 2750 to hold as support. We take a quick look at the Ichimoku cloud of the daily chart of the S&P 500. You can actually Google Ichimoku cloud and get some explanations about what these lines mean, etc. But I'll just point out that the conversion line, this blue line, is above the baseline, and price is above the cloud itself, and the leading line A crossed over the leading line B, which is bullish, and it's trending up. Apparently in the future we should get this uptrend here in July leading into August. So that's so far as Ichimoku cloud is concerned. And we haven't looked at the best choice seasonals in a while, but take a look. Right now we are seeing here an uptrend for the period June 27th to July 25th. So what we're seeing here is for the next month, we typically get a 92.31% win, a win percentage of 92.31, and an average profit of 2.73%. So I think if we are looking at the statistics, we're in good shape insofar as the seasonals are concerned. Here's a chart with the new high, new low index. And what we can see here is that it became overbought. In other words, it was parabolic here, and it pulled back during the last week or two. And so we do have this, but we're still at 796 here. As long as we stay above 500, I think we're in good shape. So we'll end this one here. Take a look at the daily chart of the S&P on the best choice with the impulse indicator. On stock charts rather, with the impulse indicator, we have a red bar. However, we are closing between the 9 EMA and the 30 weighted moving average, and that is the buy zone. So we're setting up here, I believe, for another move up. You could see when it happened here, we moved up. Okay, so that's that on the impulse. One last chart on the S&P. We've been looking at this one for a while. It's the percentage of stocks above the 200-day moving average of the S&P 100. We went all the way back up. We worked our way up here, and then in June we've been pulling back. But we're still now at 55, and as long as we stay between 50 and 65, we can do some trading. It's if we drop much lower than that we might have more losses. Now let's look at some individual stocks. I'll work off the April 13 shopping list that I sent you some time ago. So this first one we look at is Align Technology. Of course, this thing had a run here from about 250 to 350. So that's one hell of a run. It's now exhausted, perhaps taking a break, a breath, and pulling back. But notice it's closing now between the 9 and the 30. This is the buy zone. So I won't be surprised to see it get some support here at the 30 weighted moving average, and sometime in the future, near future, continue to go higher. And here's Microsoft, a daily chart. We can see that it had a nice steady climb here. Then it worked its way above the upper Bollinger Band and has been consolidating for a while. On Friday, it pulled back a bit, and now it seems to be hitting the parabolic. I still own it. This is one that I own. I would not sell it right here. Here's Apple. I don't own it at this time. I got out of it somewhere in here, in this run up here. But what we can see here is that the 4 is below the 9 and 9 is below the 30. So we are really technically in a bit of a downtrend. Doesn't mean it's going to go a hell of a lot lower, but we're in a downtrend here. And notice that we did have this bearish divergence of MACD on the daily chart, and that has been materialized into this downtrend here. So you have to pay attention to the divergences, although they're not as significant on a daily chart. Here's MasterCard. Again, all daily charts we're looking at. Still in an uptrend. You could see the 4 slightly above the 9, 9 above 30, parabolic below the most recent bars. And you know, we went above the upper Bollinger Band, and since then we've been consolidating those gains. Still like it, but don't own it right now. Here's one that I own, IDXX, which is the veterinarian diagnostic and research tool provider. We can see that, you know, we had a nice run up here, so I have a nice gain. And of course, you know, we hit the Bollinger Band, consolidated, run up again, consolidated here. We are now in that buy zone. And notice we had a positive doji here. In other words, it closed higher than it opened. So I'm holding it. Here's the ETF XLK technology sector. I own it. I have some shares. Notice again, similar pattern. Break above the Bollinger Band and consolidated, and it's actually moved down a bit here. So we given back some here. I would anticipate that if this market is going to find support, as I was discussing earlier, at the 2750 on the S&P 500, then we might get a move up from here. But I still have it. Here's Visa. Went above the Bollinger Band and just did a nice consolidation. And last week, well, on Friday, had a nice little gain here. I don't know, maybe about 80 cents or so. So I still own it. It's one of those stocks that I intend to hold for the long term. There's Costco, one that I had some calls on, the June 17 call, I think it was, and I sold it too soon because after that it went up. I guess you can't win them all. Some decisions are good and some are bad. Well, not so bad. Here's a chart of CRISPR. Remember I mentioned last week I bought a few hundred shares again, somewhere in here, I guess. I bought it here. Went up, continued to go up a bit, and then pulled back. But the parabolic dropped below the most recent bar. So I'm holding it for now. Here's Adobe. You know, I have quite a few shares, but I rode it all the way up here, and since now it started to pull back, parabolic is above the most recent bar. So this is a bit bearish. Let's face it. The 4 is now below the 9, and the 9 is just sitting above the 30. So I've got to keep my eyes on it. I don't want to give back all my gains, but for now I'm holding it. It beat the earnings and the estimates for revenue and earnings, and I don't know, some profit taking is taking place, I believe. I bought FFTY again. This is the IBD 50 ETF, and rode it up a bit, and then it started to pull back, similar to Adobe. And so we have some concern right here, but I don't think I'm going to be selling it right now. I think I'll hold it and see how it materializes for the next week or so. Here's Twitter. I did buy it somewhere in here, and it's gone up, hit the upper Bollinger Band, consolidating. Still got it. Here's an IPO I bought. Don't usually buy these too often, but DocuSign seems to be a good one. I still have it. I bought it somewhere in here again, and it's pulled back, but now it's within the buy zone with a bit of a hammer here. So I still have it. And here's Netflix. I still have it. I don't intend to sell it. That's all the time we have. We'll see you next week.